India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. This is, of course, a nice Wednesday morning before the market holiday today. And as you can see, we're all kind of dressed slightly differently. We're going to take you through markets more. I'm Prashant, with me my colleagues Surabhi and Nigel. Guys, hi, good morning.
Good morning. All ready to step into, I think, the 78th year of independence, celebrating the 77th Independence Day tomorrow. And while, of course, we're talking about, all kinds of issues in topsy-turvy markets, I think, hand on heart, we all can say that we've done well. The country has done well over the last 7 decades plus, getting ready for the 8th one soon ahead.
Oh, absolutely. I think no questions about it. Things have only over a period of time gotten better and better, as I hope they continue to.
And the best is yet to come.
Important one.
Well, that is an important marker for the future. Well, let's just quickly turn our attention to the markets then, right? You got a bit of a relief rally overnight in the US. And I think it comes in a pretty appropriate time, because you've got the market yesterday, which looked very, very dicey. I'm talking about the market here in India. Sold off 200 points. And imagine, if you had not had the kind of close overnight, and you probably had a bit of a downer of a session, it would look very, very different. So I'm calling this a just-in-time rally from Wall Street, which perhaps, saves us today. So the S&P ended about 1.7% higher. The Nasdaq was up about 2.4%. All sectoral indices on the S&P ended higher except one, which is the energy index, and that's because oil was down. Russell 2000, which is the small cap part of the market there, that also ended in the green. Now, you had the US producer price index numbers, which confirmed that inflationary pressures were easing in the month of July. Although some people are nitpicking and saying, well, it also sort of brings in some worries on the consumer demand side. But the market took it in a good way. And of course, tonight we will get core CPI numbers. So PPI is important, but of course, the big one is the CPI, consumer inflation numbers, which market hopes will show the same thing, disinflation. And then tomorrow you have the retail sales. And I think this week, I think in terms of high frequency data, even more important than the CPI will be the retail sales data, because, the market really was worried about the growth scare in the US, and retail sales is a good way to assess how the US consumer is doing. A Fed official spoke, and he also said that a rate cut is coming. This is Fed's Bostic, but wants to see a little bit more in terms of data. Although to that point about recession, etc., he says, well, that's not in his outlook, and he's expecting a more normalized kind of an economy in the US over the next couple of months, and no recession. And I think that's important to point out as well. Yields lost about 4-5 basis points. We're about 3.85% on the 10-year. Dollar index lost about 0.5%, 102.6, and oil prices are down as well, nearly 2%. And this is a screen. These are three things we can live with as we start this particular trading session, and it's good in that sense. Provides us a little bit of relief and breathing space. Yesterday, and I'll start with where we left off, because we left off in not such a great fashion. The market here did underperform pretty much all other markets. Of course, Nikkei was up 3%. That was an outlier because it was coming out of holidays. But other markets were flat in Asia, etc. But here in India, we had a bit of a sell-off, almost just under 1%. The Nifty broke the 40-day exponential moving average by a small margin. But that's about it. So we need to hold the low of 24,079, the same numbers we've been putting out for the last couple of days. That's the first low. And then the absolute swing low recently was 23,893. So these are the two levels that the market needs to defend. Hopefully, it will not come to that. On the way up, the swing high is 24,472, which needs to be broken for the market to gain some momentum from here on. Again, not very far from where we left off yesterday. And above that, you got the 20-day moving average, which is the resistance, which is 24,500, 513 as of yesterday's close, to be precise. The Bank Nifty saw a sharp fall yesterday, and we basically have come back. If you look at the Nifty Bank over the last 5-6 sessions, we left off around the lows, the recent lows. But here as well, I mean, there is hope because of the global picture, but it's the weaker of the two indices. Remember that the Bank Nifty needs to hold 49,659 on the way down, 49,659. And then on the way up, the immediate resistance is the swing high, which was 50,830. I mean, hopefully the market starts higher. The GIFT Nifty will come up on your screen and we're able to build and kind of hold on to some of these levels. Although the picture here, the momentum is broken. I mean, there are lots of themes in the market which still look good. But the point is, it's very difficult to stay long a theme once the momentum is not there. It's very difficult to keep riding that wave if the wave starts to plateau out a little bit. Maybe it's the near term, it's the medium term, but that is something we've seen in many sectors. Defense, of course, PSU defense is a prime example that we've been pointing out over the last several trading sessions now. Surabhi.
Absolutely, Prashant. So, I mean, I think we're getting all right cues from the globe. Most of the Asian markets are up and about, barring China, mainland China, as well as Hong Kong. Those are two Asian markets that are negative. But otherwise, Asia seems to be building on to sort of the green that we saw on Wall Street. So it's not too bad. The dollar is very range bound at around 102.5. Yields are okay. So not too much turbulence from the global front. If you look at the cues back home, I'll start first with the flows number. So as usual, domestic institutions were on the buy side again. They bought in about 1,200 odd crores in the cash market. Foreign institutions sold off for worth about 2,100 odd crores. So that trend is continuing. Lots of earnings came in post-market hours. We're in the last leg of the season. And the mixed picture, Hero Moto has been slightly disappointing. Revenues were a miss, and then it became a top-down miss from there. Apollo Hospitals was in line. We'll be talking to the management as well. Gold financiers were in sharp focus and very diverging trends. So for Muthoot, there's been a very steep rise in provisions. Let's see if the market's willing to look beyond that. But for Manappuram, it seems to be a very steady quarter, including their MFI business. We'll talk to this company as well as we go along on the show. Today is a very interesting day in terms of earnings as well, and I'll watch out for a lot of the PSU names. This is a big, high-flying PSU, boys. Are the numbers adding up or not? There's Glenmark Pharma, but HAL and Masgao Dock are the two numbers that I'll really be looking out for. And the new kid on the block, which has had an electrifying start, Ola Electric, will be declaring numbers as well. The only point is, and this is something that we've been asking a lot of experts as well, whether all the Hindenburg noise, whether the markets completely process that, or is it leaving some kind of a lingering uncertainty? There's a lot of political noise around this as well. The Congress has called for an all-India protest on the 22nd of August. There are different reports coming out, here and there. So let's see. That remains a bit of a question in the background, whether that will lead to some kind of an uncertain environment, leading people to book profits, basically looking for an excuse to book profits, which perhaps is what we saw yesterday, I reckon.
Well, Surabhi, today marks the second death anniversary of the greatest investor here in the Indian markets and the biggest bull, Mr. Rakesh Jhunjhunwala. So, condolences to him as well as his family. But sometimes when I hear these, cautious, these pessimistic views on India, I can just hear the reply that he's going to give, right? Because he's someone who used to not back down, the biggest optimist on the Indian markets as well. So we'll remember him today as well. But let's get back to the markets then. Global cues are positive. We had, the Fed talk that was positive because the speaker out there, the Atlanta Fed chair, said that recession is unlikely and they're looking at rate cuts. That's precisely what the markets want to know, right? But it's a big day for the Indian markets as well because you have the Nifty as well as the Nifty Bank that will play out the weekly expiry. So those are the top cues. Yesterday we ended low and there were short positions that got added. Not so much on the Nifty, but on the Nifty Bank because the index ended sharply lower. The last tick was at the low point of the day. Open interest is up close to around 17%. So there are shorts in the system. And I'll tell you what, that's not such a bad thing. You want some shorts in the system because the FI flows are not coming in there. And if in case, they get trapped on the wrong side, then you'll see a big bounce. But take a look at the FI positioning. In a matter of a week, they have gone from net long, close to around 65,000 contracts on the long side. Now they're net short, and that's the first time that we're seeing that they're a net short all the way since the 18th of June. So after 2 months, you're seeing the FIs are back on the short side. Shorts in the system, not bad, as I always say. Clients, what have they done? Well, they were net short with close to around 50,000 contracts on the short side just a week or 10 days or so ago. From there now, they're net long with close to 90,000 positions on the long side. So clients have typically got it right. And when the FIs are short, when that reaches that 1 lakh, 1.5 lakh contracts, that's when you see a bit of a bounce. So that's the top cue. The PCR, since we saw a lot of call writing in yesterday's trading session, it's moving towards the lower end of the range. It had gone to around 1.1 odd. Now it's back down to around 0.7. We've seen in the past when we go to around 0.65 to 0.7, that's when we see a bounce that plays out. What are the levels you're looking at in the Nifty? I think the Nifty is in a band, this 500-600 point band. On the downside, the 23,800 mark, extremely important that we hold out here. Till that holds out, you'll still have to say that you'll have to favor the bulls till this level is holding out. However, we're unable to get past the upper end of the range, which incidentally is the 20 DMA. So that's the important mark you're looking at. Both these two, well, they're important technical levels that we'll keep an eye out on. On the Nifty Bank, yesterday was a weak session, but the 100 DMA, the last time around as well, we bounced from around that 49,600 mark. So that's the important mark on the downside. Well, on the upside, last week, numerous times we went to 50,800. We couldn't get past that mark. Just one more comment I want to make on the F&O positioning. The number of stocks in the F&O band are now nearly around 16 stocks. And yesterday itself, we had 14 stocks that got added to the F&O band. Sometimes that gives you a view that sentiment is still a little bit cautious. You could see get whipsawed either which way. But for the time being, after a while, I'm seeing 16 stocks in the F&O band. So just want to note that. The trend continues to remain up. 23,800 needs to hold out. Let's see if we can build on to this positive start.
All right. Well, lots to track, right? And that's a good summary of everything you need to know. Let's get you quickly some money market views here. This is Pankaj Chitlangia of First Basis, who's weighing in. He says that RBI's ongoing intervention has effectively curbed the volatility in the rupee, despite pressures from carry unwinding and capital outflows. He says with the dollar index showing continued weakness and the USD INR consistently failing to breach the 84 to the dollar range, there is a likelihood of the price testing support around 83.8 in the coming days. He says the daily close above 83.98 to the dollar is needed to invalidate this outlook.
On bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield traded in a range of 6.86 to 6.89% last week. He says the MPC decided to maintain status quo on both repo as well as the stance with a 4:2 majority. And as expected, the July CPI eased to 3.5% year-on-year, led by favorable base effects. He says the market will watch out for the US CPI data this week. He's expecting the 10-year benchmark here in India to trade in a band of 6.85 to 6.95% for the coming week.